Hi, everyone, and welcome. Thank you for joining us for today's Meet the Analyst webinar, U.S. Programmatic Video Forecast, How to Embrace a Thriving Ad Channel. I'm your host, Paul Verna, Principal Analyst and Head of the Advertising and Media Practice at Insider Intelligence in New York. I'm joined by my colleague, Senior Analyst Ross Benish, also in New York. Hi, Ross. Great to have you here.
Hey, Paul. It's good to be here.
So before we get into the main presentation, I'd like to thank StackAdapt for making today's webinar possible. We'll be hearing later on from Brian Burch, Vice President of Marketing for StackAdapt. Brian is joining us from Kansas City. So hi, Brian.
Hey, Paul. Great to be here with you and Russ.
So a few things before we dive in. We have a ton of information to share, but there's no need to take notes. We'll email you a link to view the slides and the full recording. But we do want you to participate. So just use the window on the lower right-hand side of your screen to submit questions at any time during the presentation. We'll get to as many as we can during the Q&A. So with that, Ross, let's get started. What's on the agenda today?
Well, what we have on the agenda today is programmatic video. And I'm going to begin by discussing our total video forecasts. So this figure here is our estimate for US programmatic video ad spending. And what you're seeing is that this year, programmatic digital video will account for about $63 billion in US ad spend. Now, just for some context, that's very close to the levels seen in linear TV ad spending. Linear TV used to be at about $70 billion, but it's been slowly declining, and it's in the mid-60s right now. So this year, programmatic video will be near linear TV ad spend levels. By the end of next year, it will surpass them. And it's already counting for more than half of all programmatic display ad spending. And I just want to clarify that we define video as a subset of display. And there's a lot that goes into this $63 billion because it's a large bucket that includes social video, it includes OTT, it includes all the video ads that publishers have on their apps and websites. When we break it down by device, we see that mobile is where most of this ad spending is going. With overall programmatic ad spending, it's about 3/4 mobile. With video, it's slightly lower, but it's still 2/3 mobile. The reason most programmatic video dollars are going toward mobile is due to the influence of social. If you look at earnings from companies like Facebook or Snapchat, you'll see that more than 90% of their ad revenues come from mobile. And social accounts for more than 1/3 of our video estimate. So when that's entirely mobile, it has a huge effect on the forecast and makes it lean heavily toward mobile. Now, although connected television is not the largest device in terms of receiving programmatic ad dollars, it's where the biggest growth is. CTV programmatic spending will grow nearly 40%. And it has a long way to go before it ever reaches mobile, but it's already eclipsing desktop and laptop. And the path between mobile and CTV, they will only get closer as time goes on.
Now, Ross, since you brought up CTV and earlier you talked about linear TV advertising, I'm curious if you can comment on the relationship between those two, the trend lines that we're seeing in each.
Sure. With CTV, that's a subset of digital video. And linear TV is its own category altogether. With CTV, we're seeing huge increases in ad spending. Just for some context, when we created our first forecast in 2019, we had CTV at about $7 billion. So it was about 1/10 of linear TV. By the end of our forecast period in 2024, we predict it to surpass $35 billion. And at that point, it will be more than half of linear TV ad spending. And when we talk about programmatic video, I want to be clear that the way these ads are transacted and fulfilled is not the way that banner ads were sold, 6 or 7 years ago. There's a lot of guardrails that are put in place. This data from Programmatic and advertiser perceptions shows that only about 1/4 of programmatic video ad dollars go through open markets. The majority are going through PMPs, and programmatic direct deals such as programmatic guaranteed and preferred. So that means that these This inventory tends to be more expensive when it's in a curated marketplace. It's often more expensive because it's higher quality, and it's scarcer, which is why the publishers that are selling this inventory put these restrictions on how it's sold. Now, there's many different channels that you can buy programmatically. When Advertiser Perceptions did a survey on this, they found that social were the platforms that were used most often when advertisers bought programmatically, but OTT was not too far behind. Now, this data from IAB just really shows how pervasive digital video is. Nearly every marketer that they surveyed said that they've ran digital video campaigns. Not all of them are running CTV or streaming video campaigns necessarily, but many of them are, and hardly anyone can avoid video because it's everywhere these days. For the next section, I want to go more in depth on connected TV. So US CTV programmatic ad spending is going to hit almost $15 billion this year, nearly $20 billion next year. It accounts for more than 1/10 of our total digital programmatic display estimate. With CTV programmatic, as I mentioned before, there's a lot of guardrails put in place. So, this isn't necessarily sold on open exchange. Many of these ads may be fulfilled programmatically, not necessarily transacted programmatically, but you're seeing a huge uptick no matter how you look at it. And I want to also clarify that our definition of CTV is any ad that is digitally sold that appears on a TV screen. So it can be sold by a publisher like Hulu or Paramount, it can be sold by a device maker like Fire TV or Roku, or a TV maker like Samsung or LG, or a programmatic platform, such as the Trade Desk. We also include YouTube in our estimate, so we're not necessarily limiting it to professionally produced content. If it's user generated, it could still be included. And YouTube is about 40% of this $14 billion. We tend to come in a little higher on this estimate than some other research firms, but much of that is due to our inclusion of YouTube, which is accounting for about 40%. But YouTube's influence over this forecast is declining because more publishers are selling streaming inventory programmatically. So, I'd expect in the next several years that YouTube would be closer to about 1/3 of this. And that's YouTube's gross figures, not necessarily their net. And part of the reason we're seeing such upticks, they're coming from everywhere in programmatic CTV growth. The transactions are up when we get data from ad servers like Freewheel. Ad impressions are up according to measurement vendors like Samba. The device makers that are selling CTV, such as Vizio and Roku, are showing that they make more profit from selling ads and licensing ACR data than they do from device sales. And that ACR data is often used to inform programmatic sales. There's a huge uptick in the number of advertisers running streaming video campaigns. The Trade Desk is one figure that shows that. Other programmatic companies such as Magnite are showing big increases in the revenue that they attribute to CTV. And when I discussed earlier that YouTube's influence over our forecast is declining, this data from Pixelate shows how the number of publishers who sell streaming inventory programmatically is growing very quickly. There's very, very few, if any, streaming apps that aren't using programmatic in some way at this juncture. Now, this figure is our total CTV ad spending estimate. So this isn't just our programmatic estimate, this is our total CTV. And I wanted to include it because it shows how drastically we've increased our CTV forecast in just 2 years. So about 2 years ago, we expected that 2020 CTV US ad spend would be about 13 billion. We now believe we've already surpassed those levels last year. And this year, we're going to come close to $20 billion. And there's a few reasons why we have increased the forecast so dramatically. First reason is that we used to get no reporting from Alphabet on how YouTube's ad revenues were, and we had to take, a bigger guess. Well, Alphabet began disclosing YouTube specifically, and it came in a little higher than we had estimated. So when we raised YouTube, we ended up raising the overall forecast. When the pandemic began, you also saw large increases in the amount of time that people would spend streaming video. And as people spent more time streaming video, advertisers placed more money in that category to reach that audience. And then another effect of COVID was that other categories, such as terrestrial radio and out of home, saw decreases in ad spending. Terrestrial radio was hit by a decline in commuting, and out of home was plagued by a major lack of large outdoor events that were happening during a public health crisis. So when advertisers pulled their money back in those areas, they reinvested their media budgets elsewhere. One of the most common places they parked those dollars was in CTV due to its popularity with consumers at the time. This data shows how once advertisers start spending on streaming, they don't pull back. Just 1% of the advertisers surveyed by Advertiser Perceptions said that they plan to decrease their OTT ad spending. Now, most of these advertisers plan to keep similar investments year over year, whether you're looking at OTT or advanced TV tactics like skinny bundles or addressable. But you saw a sizable minority increase their budgets in these areas, and virtually no one pulling back. When we look at the types of advertisers who spend heavily on CTV, we see a strong investment coming from entertainment and media. So this data is from TVision. It showed that entertainment, media, and leisure advertisers accounted for about 1/5 of CTV ad spend throughout last year. And they surpassed other categories such as finance, health, and retail, which tend to be much larger ad spenders in general than entertainment and media. Just for some context, in our own estimates of total digital ad spending, entertainment and media are only about 1/10 combined. But here we're seeing their 1/5, that's double their share. And it's not just TVision, Kantar showed very similar findings as well. And if you've watched a lot of streaming, you'll see that it's not uncommon for streaming services to feature ads for other streaming services. I've seen Peacock ads on Hulu. I've seen before Quibi failed, I saw ads for it across everywhere, for ranging from Paramount Plus to Hulu to YouTube. And you often see streaming services advertising individual TV shows, particularly if they're from an affiliated network. If you watch Paramount Plus, you're going to see ads for CBS programs. If you watch Peacock, you're going to see some ads for upcoming NBC shows. And this all creates an effect where entertainment and media is more heavily represented in this category than it is in other digital ad channels. This slide is looking at who's receiving those ad dollars. We just looked at what types of advertisers are spending the most. Well, the companies that are receiving them, 3 stand out: Roku, YouTube, and Hulu. They're about half of the market. And this is YouTube's net number. So if we're looking at their gross number, they would be by far the largest recipient here. That's because YouTube has ad revenue shares with its creators and publisher partners, where they get to keep 55% of the revenue. The remaining goes to YouTube. We recently expanded to include Pluto TV and Tubi in this category, and they're about 1/10 of the market. And then we have this remaining 40%. So some of that 40% is going to YouTube's partners. A large chunk is going towards Amazon. I believe Amazon's ad revenues would be probably equal or surpass Roku's at this point, but it's very difficult to get clarity on that. And as we go further into CTV ad spending and the space matures, we plan to add more forecasts to break out that 40% further, looking at players such as Vizio, HBO Max, Peacock, and others.
And Ross, you brought up Pluto TV and Tubi in this slide, and you've also talked about some of the other providers that are basically creating more ad inventory and more ad-supported programming on CTV. What can you tell us about that AVOD, advertising video on demand segment, and viewership and revenue?
Well, the AVOD segment is growing pretty quickly. I believe it's about half of all US internet users utilize an AVOD at least once per month by now. And it's often used to complement the streaming that they already get from subscription services. The number of subscription streaming services that launch each year is growing faster than people's willingness to add an additional service. So people, already paying for 4 or 5, a new service comes out, they may not want to add a 6th one, but they will layer on top some free streaming that's ad supported and watch a little bit of Tubi or the Roku channel or IMDb TV. It's a large category. As that viewership's growing, advertisers are definitely working with those publishers. And a sign of this category's growth is that some of these AVOD services are funding their own funding their own original series. Hulu, which has ads and has advertising as well. It has advertising and a subscription. Obviously, has been funding originals for a while. But you're even seeing Tubi having original programming and the Roku channel. So they have much more funding now than they did just a few years ago. Definitely a growth category. And this slide from Pixelate gives some context on how much the reach of programmatic CTV has changed. So, just 2.5 years ago or so, you'd reach maybe half of US households through programmatic CTV. And now you can reach the majority, more than 4/5 of households through automation, through streaming. And although most CTV is programmatic, I want to call some attention to other ways that CTV is sold. So there's going to be about $6 billion in upfront CTV ad spending this year. You're going to see TV networks placing large emphasis on their streaming capabilities when the upfronts happen here in the upcoming months. It's not necessarily a dichotomy, because an ad that is negotiated, ad dollars that are negotiated upfront but fulfilled programmatically could count into both categories. But much of this upfront spending is being negotiated in traditional ways and fulfilled through traditional insertion orders. So CTV, while it is very data-driven, relies on automation for much of its sales, it is also keeping alive old school TV ad sales tactics like upfront selling. So we've been talking about CTV for a while. I just want to also discuss some advanced linear TV metrics. This is US linear programmatic TV ad spending. It's going to be about $7 billion this year. This is not a subset of digital video like CTV is. This is a subset of linear TV ad spending. And programmatic is now about 1/10 of TV ad spending. And that's because programmatic TV ad spending is increasing while overall TV ad spending is declining due to cord cutting. And that creates an effect where the share of TV that is programmatic is increasing, rising from 4% in 2019 past 10% this year. That's a pretty big shift in just a few years, but it's still just 10%. So I don't want to get too carried away. And if we look at addressable, which is another hot topic, this is more about how the ads are targeted. We see that it's going to be about $4 billion this year. It's rising steadily with 27% increase, but it's still a small fraction of total TV ad spending. With addressable, there's still some big limitations on what can be made addressable. Historically, it's been the 2 minutes per hour that the cable and satellite companies sell that's been addressable. TV networks have been working on making the bulk of their inventory, the national inventory that they sell themselves, addressable. And AMC is one pioneer in that field where they've been selling more national inventory addressable. But that's more the exception than the rule. Most TV inventory is still not addressable at this moment. And now I want to discuss some of the challenges and benefits of buying programmatic video. Well, for the benefits, according to a survey by Xander, advertisers believe that programmatic makes it easier to optimize campaigns. There's benefits for targeting, and they can get some good pricing deals when they use data and automation. Another benefit is that programmatic can help scale. When Digiday and Context asked publishers how do they scale their video to their audiences, they came back to adding ad tech vendors and programmatic tactics. It's hard to scale digital video campaigns if you totally ignore programmatic. For the challenges, measurement is got to be at the top, and there's various aspects of measurement that are challenging. Audience measurement's challenging, attributing sales is challenging. But what often comes up in the interviews I do is the lack of standardization in digital video can be very frustrating. With TV, with traditional TV, Nielsen may have been flawed in some advertisers' eyes, but it was also very convenient that there was a single currency by an outside source that people trusted, and it allowed both advertiser and publisher to negotiate and do business seamlessly. With digital video, there's no single source that comes to mind like that. There's many different providers depending on who you buy from or how you buy. And that can make it very frustrating when you're building a large video campaign across dozens of publishers and buying in all sorts of different ways. You have to put a lot of time and effort and just make sure you're managing your campaign if you're going to have consistent measurement. Another challenge is ad fraud. When I asked advertisers how vulnerable they believe their campaigns were to ad fraud, about 1/5 of advertisers believe nearly all their video campaigns were vulnerable to ad fraud. This was across the board, whether you're looking at CTV, mobile video, or desktop video. And that's not necessarily unique to video. If you're buying digital inventory, ad fraud is always a concern at some point or another. And the tips to reduce exposure to ad fraud are pretty standard at this point. I don't think I'm breaking any news that if you're buying cheap inventory, you may be serving it to bots or to people you may not be buying on the device that you think you're buying. So if it's too good to be true, that's probably the case. Work with trusted partners, avoid open exchanges. This is pretty standard stuff by now. And I just want to go over some takeaways from the presentation I just gave. So US advertisers are going to spend $63 billion on digital video this year. That's nearly the amount that they will spend on linear television. The vast majority of this, about 2/3, is going toward mobile. But CTV is where the biggest growth is at. We're going to see a 40% increase in programmatic CTV ad spending this year. And I think we're going to see healthy increases for the next several years in this category. And back to you, Paul.
Well, that was great. Thank you, Ross. And before we go to your questions live, we're now joined by Brian Burch, Vice President of Marketing for StackAdapt. Welcome, Brian. Thanks again for being here.
Thank you, Paul. Thank you, Ross.
So, Brian, to kick things off, let me ask you, did you see the kind of high growth in programmatic video in 2021 that Ross showed during his presentation?
We really did, Paul. We actually maybe saw it with even a little bit more intensity on our platform. Prepared a couple of slides. First one shows the unique accounts on our platform that launched the CTV campaign. You can see that rose dramatically, 216% between 2020 and 2021. And then if you look at just the revenue, CTV spending overall, that increased by over 100% from 2020 to 21. So we definitely saw that surge.
That's quite a bit of growth. Now, do you see the rapid growth in CTV shifting budget from other channels, or is it unlocking growth in spending overall?
So it's the latter. It's unlocking growth. So again, we prepared some slides with data from our platform, and what we found is that CTV's growth, programmatic videos growth, has become more of a central pillar for more multi-channel campaigns. We saw growth from 2020 to 2021 of 46% on our platform customers that were running multi-channel campaigns. As video now reaches this large audience, measurable audience, a display campaign run on our platform along with video allows you to retarget and hit that same pool of users with display. Native a little bit less, but still 61%. So very impressive ability just with programmatic video. And even we saw the same trend with connected television. So same thing again, if a multi-channel campaign was built around the pillar of CTV, 68% of that same audience was reachable via display, 74% via programmatic video, and then 51% via native.
So Brian, what do you think our audience should do with this data? What actions should they take?
We prepared some thoughts. This is a real phenomenon. The pandemic accelerated the growth of this channel for advertising. So we think agencies have a platform now to bridge the gap between linear and digital. We saw almost a 30% increase of cord cutters from 2020 to 2021. The number of minutes spent on digital video consumption can give agencies and their clients confidence that digital video consumption is definitely the central pillar that we've been waiting for. CTV ad spend poised to grow very dramatically. A lot of advertisers, myself as a marketer, we're looking for a way to prove business outcomes with our investment. And CTV is such an effective format for upper funnel. It's measurable. You can use it in direct response campaigns with proper attribution. We saw, Paul said, I think our data is a little bit older than Paul's. I think Ross said that about 86% now of US households are reachable via programmatic. So that growth has been really phenomenal. And again, it opens up so many opportunities from a multi-channel perspective for people who believe CTV is the heart. It's the very heart of what we define as television advertising now. And the opportunities are there to maximize the return on ad spend that we've all wanted as video sort of came of age.
Well, thank you, Brian. Now it's time to get into our audience Q&A, and we received a lot of great questions. We'll start with one from Juliana in Roanoke, and it's for Ross. So Juliana writes, you mentioned that people are spending more time streaming video. How much time per day do they spend on it?
We're getting to the point where people in the US are spending almost an hour and a half per day streaming video. And that's the entire population. It includes many people who don't stream video at all, such as my parents. So it's a pretty big growth, and it's up over 15 minutes per day prior to the pandemic's beginning.
Ross, what is it going to take to get your parents to start streaming?
Better internet connection in rural America.
Okay, so for the next real question, we go to Jacob in Fort Lauderdale, and this one's also for you, Ross. Do you have estimates of how much YouTube viewing happens through connected TV?
YouTube's provided some stats on this, and there's some third-party research firms that give estimates. One that comes to mind is Conviva, and they estimate that YouTube's viewing on TV sets is about 25% of its total viewing, about 1/4. That's worldwide. So the majority, just over half, is coming from mobile still. But CTV has grown a lot for YouTube. YouTube's total viewing on TV sets 5 years ago would have been pretty minuscule, and now it's already over 1/4 of its viewing.
Okay, so the next question is for Brian, and it comes from Sean in Phoenix. Brian, as you and your team look into your crystal ball at what we hope will be a year less affected by COVID, what's on your radar based on the campaign spending of your clients?
Excellent question. What we believe what we're seeing on our platform is as the pandemic begins to recede and the business climate improves, a lot of these behaviors that were pandemically driven are going to continue and are going to grow. In fact, the growth of CTV seems to be almost unbridled. And as Ross mentioned, once an advertiser begins to spend on programmatic video, they continue to spend on programmatic video. So we see an explosion across the industry in multi-channel campaigns as CTV and programmatic video take their rightful place kind of as the center or the pillar of multi-channel campaigns.
Okay, next question comes from Dan in Boston, and he's asking, what about desktop? Has video investment grown as well on desktop, and why has mobile grown so much? And I guess, Ross, you probably want to take that.
There's still definitely video investment on desktop, but it's not growing at the pace that like CTV and mobile is growing. And that's just due to time spent, time spent on mobile devices and on internet connected TV sets has increased dramatically, while the time spent on desktop has been pretty flat. With mobile, so much of that's driven by social, and people aren't on social nearly as much on their computers as they are on their phones.
Okay, we move on to Beth in New York, who asks, Ross, one slide in your presentation showed perceived ad fraud declining for CTV. What's driving that?
I think advertisers are just becoming more educated on what it takes to run a CTV campaign and on what it realistically costs. There used to be a belief that you could get it on the cheap, but that made them a part of some really large ad fraud schemes. And now I think with most advertisers, they realize that $5 CPMs with CTV is going to be junk, and that you're going to have to pay a pretty good price to get that video ad on a large screen like that. And as they've done that, they've reduced themselves to fraud.
Okay, we have a question from Valerie in Providence, and she says, will Apple's ATT reduce the number of social video ads that are sold programmatically? And Ross, feel free to take that one, but Brian, you're welcome to chime in as well.
I don't think it will reduce programmatic video ad spending or even social video ad spending, because there's just so much time spent still on social video and so many ad dollars going toward it that I'd still expect like Facebook's ad revenues with video to increase year over year, but it will curtail the growth. Some of these social companies, Facebook in particular, we're still seeing 40% plus increases year over year in their video ad revenues. And that's not happening anymore. The ATT will shrink their growth a lot, but there's still going to be, year over year bumps.
And from StackAdapt's perspective, we're one of the leaders in contextual advertising. So the industry is adapting as we change the definition of privacy, and the contextual methods that are available today and will be available tomorrow are really powerful. In some cases, we're seeing results that are better than retargeting campaigns.
So here's an interesting question from David in Tampa, and Ross, I'm sure you're going to have some thoughts on this. Can you include the glossary or definitions for each type of video? How do you define addressable TV, linear, VOD, vMVPD, et cetera, when you send out the deck? I know some of those definitions were not in your deck, but I also know that we routinely include those glossaries in reports. So any thoughts to offer, David in Tampa, on that?
Yeah, we could include the glossary. And I probably shouldn't go through every definition right now because I may bore people to death, but we could definitely add the glossary. And I guess just to give you one example for addressable, we're mostly talking about the individual targeting of television ads, but to give you the definition speak would be much more formal and less colloquial than how I'm giving it now.
Yeah, and just a comment on definitions. It's a little bit of a balancing act because we know we're speaking to an informed audience, so we tend to fall back on some of the jargon that everybody uses in the industry, but we also try to keep in mind that some of that jargon and some of those acronyms and definitions are interpreted differently by different people. So we take very seriously the need to be clear about that, and we will put that in the slide deck. Another question, Ross, from Jose in Washington, D.C. When do you expect, or do you expect CTV ad spending to taper off? Around what year and what growth level? And I understand if you don't have the data points exactly at your fingertips, but if you could sort of comment on what trend line you see for CTV ad spending.
Well, I think CTV ad spending is still going to grow at a very healthy clip through at least 2025. Maybe taper off toward the end of the decade, but I'd still expect year-over-year increases at that point, because it hasn't reached linear TV spend by any means yet, and that's going to eventually come.
Okay, so the final question, and this is a bit of a loaded one, and I know we've covered this topic quite a bit too. What kind of improvements in consistent metrics do you think we may see in the future?
Oh, that's a good question. Well, just maybe more consistency on audience metrics. I think, attribution and outcomes will be tough to get consistency, but just getting everyone to adapt to the same standards of how they count views and how they count viewers. And there's nothing with streaming that's the equivalent of like a Nielsen audience minute, but maybe there will be one day and it'll be used by everyone. If there is something like that now, not everyone's using it. So that's the tough part, is getting everyone to use it.
Yeah, it seems like that kind of consensus and consistency is not in the near-term future, but there are a lot of parties that are working toward that goal. Well, that's all the time we have for today. Thanks again to Ross for joining us, and a very special thanks to Brian and to the team at StackAdapt. Our eMarketer production crew behind the scenes also deserves a huge thank you for making this webinar possible. As promised, we'll be emailing you soon with a link to the slides and the full recording. Now, before we wrap up, let me take a moment to tell you what's happening across eMarketer's media channels. You can register for upcoming live analyst and tech talk webinars at emarketer.com/webinars. And on Monday, March 7th, we'll have another analyst webinar focused on programmatic display advertising and featuring analyst Evelyn Mitchell. So please join us for that. On the audio side, please tune in to Behind the Numbers, eMarketer's daily podcast at emarketer.com/podcast. And finally, please check out our newsletters. So thank you again for joining us, and enjoy the rest of your workday.